Kyle with the Q&A question here. When you define your support resistance levels, would you say that the more times the level is hit, the weaker it becomes? Or would you simply watch the tape at that level to view interest? Love the new setup, especially your daily exposition of levels and the market as a whole. Thank you, Kyle. And by the way, I got a lot of positive feedback. Feel free to mention something in the chat here to continue the feedback and let me know. I didn't get any negative feedback, but so now's your time. But the way I did the recap yesterday, where it's like, here was for what I told you from my preps. It's quite a simple thing. Like, we're gonna slap on some arrows and talk about, like, here's where the best trades were. I tried to do that before from the junior desk with the trade of the day blog series. I think people really liked that. So I think it could be impactful and really value added, as some people have described it to me, to not only just say, here's what happened relative to the levels, but here's what it means to us and I will try to balance, because keep in mind, there are two groups of people on this webinar. There are two groups of people who use that daily market insight, right? There's some people who they're not ready to be a student. They don't want to be a student. They just want some good levels for prep. Fine. Enjoy. Here you go. Right. And by the way, we removed the community for those folks. And I have gotten a lot of emails. This is going to be a little bit of a, things are evolving here. So this is going to be a little bit of an open forum here today. I've gotten a lot of emails from my non-students, right? Just your daily market insight subscribers, right? Used to be the prep levels or whatever we called it. About, man, I wish we had a community. I wish we had a place to talk and whatnot. And here's, some of you may be on this call. What have I said to every single one of you? You had that for years and it was dead. Student community, thriving, learning, sharing, journals, all of it's going on. And it makes sense because all those people, here's the key, guys, speak the same language. We speak the language of NADRO. So we can communicate at very, very high levels regarding what happened in terms of markets and what's going on with our trading and learning concepts and all kinds of stuff, right? The other people who just sign up for just the daily market insights, okay, so there's your daily market insights. Enjoy, use them however you wish. Great. But in terms of community, it's very difficult because you're all so different and whatnot. Not that it can't happen, but I gave it years to happen. And I just didn't see it, guys. As you know, if you were in the old chat, if you were in the non-student area, it was dead. So I'm open to it, but like the proof is kind of in where it was. So we're just not going to invest in moderating it, manning it, all this stuff. I'm going to focus on the student side, and I'm going to have a really good pre-market daily insights for people who want it. And that's where I stand on it. I'm always open to feedback. I'm always open, as you guys have seen, the entire time I've ran any form of futures business, in terms of education, desk, you name it. I am very open to feedback and very open to adjustments in terms of structure and models and what we do. And if I don't agree, I'll tell you why. And, that's that. So that's where I stand on it. My door is always open. You guys know how to email me and reach me in the community or whatever. So let's get to Kyle's question. I guess we didn't get to that. When you define your support resistance levels, would you say that the more times a level is hit, the weaker it becomes? I'll go ahead and address that one. In general, yes. And I think that comes from a basic auction market theory principle. And so it does depend on how the level was hit in terms of, was it blasted through. So for example, let's say we're focusing on this level. Okay, top right chart. There's a big difference between, hey, we got to this level once, hey, we got to this level twice, broke through it, reversed really sharply, and hey, this is the third time we're getting to this level. Yes, I know that's like an inverse. Another thing I can't ever remember, which is the head, shoulders, and which is inverse, which is stupid because it makes sense. Anyways, this is a head and shoulders pattern. I get it, but head and shoulder has shared beliefs, if you will, with auction market theory, in that the middle part is important because that's where excess, as we call it, was created. So in example A here, Kyle, this is going to be a place where I'm pretty interested in the short. And I don't care that it's the third time up in the, I do care that it's the third time up in the level, but it's not representing to me the level being weak and likely not to be a good one to short from. On the other hand, example B, we'll use this green level over here. Excuse me, let me get a drink of water here. If we come up to this level and we come back, and then maybe we come up into it again, and then maybe there's like some kind of weak little pullback down into here, and then we're coming up for that third test. Guess what? Example B, I believe that the level has weakened, and that coincides with auction market theory principles around what we call a lack of, everyone say it together, excess, right? That says lack of excess, but this is example B, and that's a lack of excess. So lack of excess versus having excess is important when we look. That's why we use profile structures, you know? This, you know, S&P going higher here today from the moment of now forward will not be surprising. The sell-off in J period here in crude, not surprising. We started to have that lack of excess. Now, this is interesting in terms of profiling when you get precision lack of excess at like a key inflection, like a decent point of control or something like that. It can kind of signal some short-term exhaustion or tiredness or one-sidedness or a need for inventory correction, whatever you want to call it. So not surprising the way today looks like in terms of a profile and whatnot, and its uses in terms of excess. Excess is a huge topic. Bryce asks, any tips? Wait, I didn't get to the second part of Kyle's question. Or do you simply watch the tape at the level to view interest? So to answer that second part real quickly, I incorporate it all, right? If we've got a lack of excess, but I'm getting really strong signals on the tape, might be enough for me to take the trade. If, you know, excess is really nice and it's from a really strong narrative, as I mentioned, and the tape is not really showing me it's a great idea, I'll probably still take the trade. So to me, it's one of the key things about trading the way I do. It's about ranking and distilling information, understanding a hierarchy and a structure of how to say when what variable is more important than another variable, right? And that's one of the things that takes the longest to master, I think, within Nadro. I give best practices, I give, you know, things like that, but it takes time, and you develop your own niche within the space to handle a lot of